Ladies and gentlemen, good day and welcome to the Q4 and FY21-22 earnings conference call of PNB Housing Finance Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Gupta Padhi. Thank you, and over to you, ma'am.
Thank you, Margaret. Good evening and welcome everyone. I'm sorry for the delay from our end. We are here to discuss PNB Housing Finance Q4 and financial year 21-22 results. You must have seen our business and financial numbers in the press release, and the presentation is also uploaded just now, shared with the Indian stock exchanges, and it's also available on our website, www.pnbhousing.com. With me, we have our entire management team across verticals sitting over here, led by Mr. Hardayal Prasad, Managing Director and CEO. We will begin this call with the performance update by the Managing Director and CEO, followed by an interactive Q&A session. Please note, this call may contain forward-looking statements which exemplify our judgment and future expectations concerning the development of our business. These forward-looking statements involve risks and uncertainties that may cause actual developments and results to differ materially from our expectations. PNB Housing Finance undertakes no obligation to publicly revise any forward-looking statement to reflect future events or circumstances. A detailed disclaimer is on slide 40 of the investor presentation. With that, I will now hand over the call to Mr. Hardayal Prasad. Over to you, sir.
Thank you, Deepika. Thank you, Margaret. Good evening, everyone, and welcome to our Q4 and financial year 21-22 results. On behalf of the company, I extend a very warm welcome to all of you. Let me start with the business update. As we informed during the last quarter, we intensified our focus on retail disbursements. In Q4 FY22, we have disbursed rupees 3,698 crores, registering a growth of 31% on a quarter-on-quarter basis. For financial year 22, we have disbursed rupees 11,246 crores, registering a growth of 8% as compared to the previous financial year. Of the total disbursement done during the year, 97% was in the retail segment. On the back of the retail disbursements, we arrested decline in the loan assets during the quarter. The loan assets stand at rupees 56,889 crore as on 31st March 22, as compared to 56,798 crore as on 31st December 21. The retail loan assets increased by rupees 693 crores to 49,730 crores, and corporate loan assets decreased by 602 crores to 7,159 crores. The corporate book has registered a decline of 39% during the year, primarily on account of sell-down accelerated payments of 2,664 crores during the financial year. As per our stated strategy, we have reduced our corporate assets to 11% of the assets under management. As on 31st March 22, our AUM for the Unnati segment was 3,108 crores. With our focus on this segment, we have increased our presence through 29 new locations operationalized during the second half of the financial year. Talking about our asset quality, as a result of our continuous efforts to improve our asset quality, our retail GNPA registered a decline of 140 basis points quarter on quarter to 3.6% as on 31st March 22. The corporate book GNPA stood at 2,561 crores as on 31st March. The increase in corporate GNPA is on account of one large Gurgaon-based developer that moved from stage 2 to stage 3. With this, the gross NPAs of the company stood at 4,332 crores as on which is 7.61% of loan assets as on 31st March. The net NPA as on 31st March stood at 4.49%. The retail collection efficiency for quarter 4 FY22 stood at 99.5 as compared to 98.5 in Q3 FY22 and maintained around 98% during the whole year. Talking about the liabilities, the company has registered downward trajectory of borrowings as on a quarterly basis. The incremental cost of borrowing for FY22 stood at 5.8%, registering a decline of 96 basis points as compared to FY21. The cost of borrowing declined by 61 basis points to 7.3% as on 31st March 22. The company has maintained liquidity of around 5,400 crores as on 31st March 22. The net interest income during the quarter stood at 377 crores compared to 593 crores, registering a decline of 37%. During Q4 FY22, there is a net income reversal of 58 crores on derecognized loans due to unwinding impact of spread contraction and runoffs, whereas there was a net positive impact of 58 crores on derecognized loans due to fall in assignees MCLRs in the same quarter previous year. Further, in Q4 FY22, there is an Ind AS adjustment net interest income reversal of 70 crores. The profit after tax for Q4 FY22 increased by 33% to 170 crores versus 127 crores for Q4 FY21. The company is comfortably capitalized with CRAR at 23.4% and Tier 1 at 20.7%. The leverage has come down to 5.4 times as on 31st March 22 with reduced share of corporate book. On the back of improvement in PNB HFL's leverage and reduction in the share of corporate book, ICRA on 12th April 22 revised the non-convertible debentures rating outlook to stable from negative. On the strategic priorities laid by the company in January 21, we are pleased to inform you that we have achieved sustainable business performance for few key monitorables, which are maintaining adequate provisions, maintaining over 80% of our turnaround time, maintaining healthy mix of retail. The company will continue its focus on retail loans, including self-employed and affordable housing, enhance credit underwriting processes, improve collections, and upgrade its technologies to improve to grow and improve efficiencies. The Board of Directors on 9 March 22 approved capital raise of up to rupees 2,500 crores through rights issue. With this, I would like to open the floor for questions and answers. We have the entire management team sitting over here, and we welcome any questions that you have, and we'll be more than happy to answer them. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Aditya Doshi from Chanakya Capital Services. Please go ahead.
Hello, thanks for the opportunity. First of all, congratulations to the team on the ratings outlook update and the rights issue approval. My question was from the long-term perspective.
Sorry to interrupt you, Aditya. May I request you to come on the handset mode? I think you're on speakers.
Yeah,
audio is not.
I'm on the handset mode only.
Okay.
Hello.
Please come closer to the phone then. Thank you.
Hello. Hello. Is it audible now?
This is better. Please go ahead.
Hello. Thanks for the opportunity. First of all, congratulations on the ratings outlook update and the rights issue approval. My question was from the long-term industry perspective. With a large HFC merging into a bank and recent regulations have been amended in line to be in banks for NBFCs, how do you think a sustainable model can be made for NBFC HFC for the next in a long-term horizon? I understand we need a NBFC in a country like us at two different segments. Second was what a data keeping question. What is the BT out percentage? And third, the large corporate slippage in stage 3 of the Gurgaon account. How much provision has been made in the books up till now? Thank you.
Okay, I'll talk to you a little about the growth strategy and the impact of the announcement that has been made within the merger. So as a retail-focused housing finance company, we will leverage. We're very clear about it that we leverage our expertise in self-employed and marketing, where the company has its niche in terms of distribution network. In the market, we are known to be extremely good in underwriting, not only in acquisition, but also in underwriting of the self-employed and other books. So we are going to continue to look at it. There are massive opportunities coming in, and there is a upcycle in the industry that is very clearly visible. So the underwriting capability services will play a major role in terms of the acquisition and the underwriting. Additionally, the company will focus on affordable segment, as we have mentioned it earlier, which is the Unnati segment. We have created a vertical. We have opened 29 branches in Tier 2 and so the retail disbursement is going to continue to be the major focus area. And what we are going to do is that we have already brought down our corporate book to about 11%, which is something that we had very clearly said that we'll take it down to 10%, and after that we will start looking at it. So once a decision is taken at the right appropriate time on what exactly we are going to do at the corporate book, that is one which has an opportunity of giving us higher yield, and it also has an opportunity of retail linkages that come. We have already opened up massive amount of APF tie-ups that we have, and these builder tie-ups play a very important role in terms of the linkages that we have. We have again reconnected with all the DMA, DSPs and everybody to ensure that there is significant amount of business that keeps on coming in and flowing in. One of the biggest things, and actually that should, going forward, that should be an important milestone. So we are actually in the process of upgrading our technology, our acquisition platform, our business rule engine. Now these are some of the things that will help us significantly in handling very large volumes. Once we start handling large volumes with the acquisition model and the automated underwriting model, it is at that stage that we should be in a position to break even very quickly and start handling large volume, which the market today is ready. If you go and talk to the market says there's massive opportunity. All of us are fully aware. Another important significant thing that we have done is that we have also tied up with two banks on the co-lending. The last one has been with the largest bank. And they are very upbeat. We are also very upbeat. So wherever we find that there is an interest rate arbitrage and we can sell a product, we are going to push that. So the growth strategy, this is what, and the capital raise as it comes, we are going to ensure that these things are taken care of. And on the other things,
the BT out for the year was 16.7% approximately. So that's how it is. Earlier it was more than 18%, which has come down now to some extent, and it's already under control.
Okay, thanks. And regarding the large NPA account of Gurgaon, which is slipped into stage 3, how much provision as of now we have on the books?
See, the company has overall level in the corporate book in stage 3. We are maintaining the stage 3 coverage ratio of around 46%. And on those lines only, we have been building it up provision for all the fresh accounts, all the fresh slippages what we have.
Okay. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Himmat Anand, from an individual investor. Please go ahead.
Yes, hello everyone. I am actually not really happy on looking at the financial numbers, and I would like to know what's your view that why the company has not been able to bring any growth since its IPO, and the share price has been suffering massively because of that. And what would you like to say on the rising percentage of gross NPA and net NPA, as well as something concrete about the the rights issue which got approval last month?
Sir, on the rights issue, what we can say is that the board has approved the capital raise of up to 2,500 crores, and we have started the process. And with the bankers and legal counsels all on board, the timelines would be, of course, contingent on the market conditions as well as the final approval from the board. PNB has already applied to the RBI. This is the communication which we have received last from them as well. So this is where we are. We can just say that the work has already begun on rights issue, and we are working on to that front with all the councils and bankers on board.
Yeah, but when Reliance Industries announced an rights issue, they were ready with the details, upcoming details of ratio and everything in the next 10 days. And it's been already a month that, the company doesn't look like in a position to have the details.
10 days is not that. We have said that the approval will come.
Yeah, so if you recall, when we had also announced after that, PNB had also shared its press release to the stock exchanges, where they have clearly mentioned that they have the intention, but they need the approval from the regulator. So, so this is where the status is. The example which you are taking, there are few regulatory approvals which are required, and because of which we will not be in a position to give any further details to this thing. Yes, as I mentioned, the councils, the bankers, everyone is on board. We are working with them on the requisite documentation and everything.
So two things. One is that actually what the company has done everything possible to ensure that the moment the approval is there to the PNB from the regulator, we are ready to go. So it's just that approval that is expected whenever it is going to come from the regulators. We are there. Everybody remains committed towards raising the capital as quickly as possible.
Okay. And anything that you would like to tell the other shareholders as well regarding why the gross NPA is rising so much that it is becoming so threatening that in the coming year it can't be denied that the company might go into liquidation because of
that? I think we have to see the things in a better perspective. The statistics actually truly saying that there's a rise in NPA, but we need to understand the reasons behind the rise. I think we have already discussed this thing, and the company has taken a lot of initiatives. I would just like to put the things into the right perspective. On the retail side, if you see the company's NPA numbers in absolute term, it has risen from the level of 600 crores to 1,200 crores in March 20. Then there is due to the COVID impact, it shoot up to a level of 1,600 odd crores. Then with the RBI circular of November 12, where they clarified that, there was an addition of 829 crores. I'm talking about just retail. So that takes us to the level of somewhere around 2,431 crore of NPA. And today, after the tremendous efforts, once we get all the legal resolution channels available at our disposal, which is SARFACI, our retail NPA numbers are standing at 1,770 crores. So the COVID impact was large. There is no denial that we should have been done better, because our total dependence on the resolution goes to a legal SARFACI channel. We learned during this period. We strengthened a lot of early delinquency behavior resolutions. We strengthened our team. We worked on the advanced analytics. And today our position is that from the level of 2,431 crore of NPA, we're at 1,770 odd crore on the retail side. And we are quite confident that going forward, our NPA resolution with these efforts will continue and will perform better. One should not, just a second. Now, I have talked about the absolute numbers. Now, if you look at the denominator side, the denominator continues to degrow. I mean, after 9 quarters, the organization has achieved, in this quarter per se, a positive growth in the portfolio on the retail side. On the corporate side, yes, we have had our own share of problems. We are resolving it. We have resolved in the last, 2 years some big ticket account. We have given already information about this. In many of the accounts, resolution is going on. Unfortunately, we have got one large exposure slipping into NPA in this quarter. We are working on it. Hopefully, we will have got a resolution very soon around those. But rest assured, in all those assets, wherever we are working, we have got a good cash flows underlying, good security, and resolution is also on the cards. So this is the.
I don't want to say that the situation is so bad that it could go in liquidation. It's very clear. One is that there are 2 very, very good green shoots. One is the first time after a long time that the company actually has shown a positive growth. It's almost about 600-700 crores of growth that has come in the retail. The second is almost about 600-700 crore reduction in the NPAs of the retail, which is significant, let me tell you. After all the COVID-related problems, the kind of book that we have, there was these issues, but however the company has started. Lastly, the total provision to total asset is 4.5. Now this big account, the situation would have looked so good if this large account, which is a Gurgaon-based, developer, if this account would not have turned NPA, it would have looked absolutely good. I'm not saying that it's absolutely amazing, but the journey towards that would have started very clearly. Now this is one of the largest builders of India, with a tie-up with another second largest, third largest builder in India. Now there are some disputes that are going on. Those disputes have resulted into this account, which has gone into NPA. We are trying to resolve our debt. We have already taken possession, symbolic possession of the property. So we are trying to resolve it as quickly as possible. It is multiple times than the value of that property, the value of the loan, outstanding of the loan. So we are very confident that we are working with the way we are working with these players. We should be in a position to actually start resolving a lot of accounts that we have already done, and we will continue to look at this.
Yes. Okay. And don't you think that the absence of the valuation report last year, when the QIP was done in favor of Carlyle and General Atlantic, and which was bringing Aditya Puri on board, the company has suffered a massive setback? That if Aditya Puri could have come on board, the shareholder value would have been tremendously unlocked, and the company would have readily gone into a very positive perspective from the market, market approach. And just a mere absence of valuation report caused all that Supreme Court legal drama, all that happened, and that then appeal and everything. Because of that, the company lost opportunity as well as growth.
I would not like to comment on it. The matter stands closed. We have whatever was required to be done, we have done it. And at this stage, going back 6-7 months and reopening something that has happened
almost 11 months.
I would not like to comment on it. We'd like to move forward now. And by announcing the rights issue, we are moving forward.
Yeah, that's all. I would not like to ask anything else.
Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Rikin Shah from Credit Suisse. Please go ahead.
Thank you for the opportunity. I just have one question. Wanted to understand and if you could help simplify what is driving this net interest income reversal on derecognized loans due to unwinding of that spread contraction versus the gain in the previous year. And for how many quarters do we expect this to continue? Is there any kind of indication you could provide when this could stabilize? That's all from my
end. When you look at the yield, the spread contraction is primarily on account of a particular reason provided for 2 large accounts fully in this particular quarter. So on account of that, as per standards, whatever interest which we have recognized earlier in those accounts needs to be in it. It is on account of that particular piece there is a contraction in the interest rate which yield you were looking at as of now. So if you adjust that particular one-time adjustment which has been made in the books of accounts on account of making provision against a large account, our yield will be up by 50 bits.
And for how long we have been having these reversals for a few quarters now? So any indication on when this could stabilize, or we do expect these reversals to continue in the near term?
See, it depends. These are the accounting adjustment depending upon when a particular account is turning into bad and needs to be written off, so the income needs to be reversed back. So we are on a growth trajectory and on a recovery phase. So we don't think that in the near future we would be we would be having a subsequent reversal. These are the index related adjustment and the notional adjustment. But the overall yield on the pool is pretty much stable.
So Rikin, just to add to what Manish mentioned, there are three reasons because of which the interest income has come down. One is that there is a decline in the corporate loan book, which is of a higher rate. It gives us higher yield. The second reason is the repricing of my retail book. To some extent, that also impacts. But two major further reasons because of which the interest income has come down. One is a reversal of income because of securitization. We have seen a negative impact of 58 crores during this quarter, which is Q4 FY22. This was actually positive 58 crores in Q4 FY21. So that's the impact we have seen because of the securitization impact. And the fourth is there is some Ind AS adjustment on the reversal of interest income on some of the corporate accounts, and the net of that is around 70 crores. So overall, because of these two factors of securitization and the reversal of interest income, we see an impact of around 50 to 60 basis points on our yields. And accordingly, the impact, of course, comes onto the spread and NIMs as well.
Quarter number, you can also give the annual number, the gain on the...
On the annualized, on the FY22, when we talk about the same thing, the primary impact is because of the securitization. So there is a negative impact of 216 crores in FY22 because of the securitization, whereas it was a positive impact of 178 crores in FY21. So net impact actually is like approximately 400 crores comes onto the year, and hence the year.
And maybe if I can just squeeze in one more question, just wanted to understand what is your best interest rate on the retail side. Retail mortgages is what I'm looking at. And what's your view on interest rate and trajectory from here, in the sense that are you going to take any further cuts, or this is pretty much bottom of where we are?
Yeah. So on the overall AUM yield, we are currently at 8.80%, and on the NR front, it is 8.74%. So on the incremental side, we are doing business at 8.44%. That was what the incremental yield for the financial year 22 was. So we have seen that last few quarters we were not able to get the interest. Our interest rate gap was too much, and our book was also not growing. So to ensure that we also have the positive growth on the ENR and the business growth, we tried to seek out the opportunities wherever that was possible. Due to the lower cost of borrowing, also some impact on the cost of borrowing. Because of that, we had those opportunities, and that's how we had been able to bring down some amount of rate of interest. There were two reasons. One was to ensure that we were able to retain our existing book, and second was also to have an incremental upside on the fresh disbursements.
Okay, thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Miten Lathia from Fractal Capital Investments. Please go ahead.
Thanks for the opportunity. Just wanted to understand the Unnati outlook.
So we've sort of pretty much have similar AUM at the year end as last year. If you could sort of give some sense of what that book should be a couple of years out or 3 years out, basis your plan.
Yeah, on Unnati, yes, the company's focus has remained, and in this particular quarter, we have been able to get 29 new branches across Pan India, and the focus will continue to remain there. And we'll also open a few more branches in the next couple of quarters where the business opportunities would be there. So as of now, we have already we are doing approximately about close to about 94 crore kind of a business in a month, and this will grow as we open up new locations and new branches. For the Pan India, we had done 794 crore worth of disbursement in financial year 22, and that will continue to grow from here on with the increased focus on the Unnati business.
Then if that is the level of disbursement, the rundown shouldn't be as steep, right? I mean, what are we missing here?
Can you just repeat?
No. So if you overlay the last year end's closing AUM on Unnati and the disbursement that you did, the rundown on the book seems pretty steep. So I was just trying to understand what am I missing.
While Pankaj pulls the numbers, let me tell you, what we are looking at Unnati is a completely new Unnati portfolio. It's going to be a new product with a completely new, with this 29 branches, the model is totally different. We are no longer going to now work on this product as we source business on the prime segment. The way we do business, the same people going ahead and bringing in. Now here we are looking at ticket sizes which are actually going as low as 5 lakh rupees. So it's a totally different model. So the growth you will not see in the long term is the numbers that are going to get reflected. And secondly, based on the risk matrix, the interest rates will also vary. So there is going to have a little more, maybe about 100 basis point more yield on the total loan. So those are some, I think that is more critical from our perspective, that once we start these 29 branches, which we have opened from December, and they are functioning now. Once they start kicking in, you have to give about 2-3 months to these branches. Once they start kicking in, I think we would like to talk to you on the number of loans booked, and the portfolio will come subsequently.
Fair. I was just wondering if you had a target in mind to get to for that book.
Target, you have the target? I think we'll share it. We will see. I think we'll let you know.
Then we are, as you are aware, we are in the midst of this rights issue and we are working on it. So we are not talking about the numbers as of now, what is the targeted numbers per se. But what Pankaj has mentioned, that the focus is on Unnati. We have opened till now 29 locations in Tier 2 and Tier 3 cities, and we are looking forward to add more locations in the coming financial year, which will help us in increasing our disbursements in this particular segment and hence the AUM. As of now, the disbursements in Unnati is around 8% of our individual housing loan disbursements, and we are looking forward to increase these numbers.
Understood. Thank you.
Thank you. The next question is from the line of Ankit Agarwal from Arc Capital. Please go ahead.
Thanks for the opportunity. Sir, I have a question on the corporate book level. So do we see this corporate book level stabilizing? When do we plan to start disbursing on this book?
Yeah, Ankit, as of now, you must have seen that, we've, as a deliberate strategy, been bringing down this book to a very, very comfortable level now, which is close to 11% of our AUM. So, so we've somehow reached our target, which we had in mind in terms of our reducing our corporate exposure because of the market scenario at that point in time. So we are reevaluating the scenario now. I mean, we are really looking at this segment, and we'll, at the opportune time, we'll probably look at this disbursements again. So that is something in the works right now, but definitely what we plan to achieve by reducing the book, that more or less we are there.
Oh, okay, fine. That's about it from me. Thank you.
Thank you. The next question is from the line of Akhil Hazari from Robo Capital. Please go ahead.
Hello, good evening. Am I audible?
Yes, sir.
Yes, please.
So just regarding, the statement that about the green shoots being shown in the AUM growth right now. So going forward, what it look like? Is the management focused now on, increasing growth, or is it more focused on, credit asset quality and, reducing the NPAs further?
See, for the organization perspective, growth is also important, and as well as the credit quality is also important, right? Now, in terms of the growth, as we told you that after the 9 quarters of negative trajectory, and as Pankaj talked about various initiatives we have taken in terms of realigning our, interest rate and, sales and marketing strategy, so that mojo of the disbursement is coming back. That will continue. But as we have reduced the retail NPAs, by a large quantity of almost 700 odd crore, that efforts will always continue. In line with that, wherever realignments we have done in the policy platform, that has been done, the technology framework has been enhanced, and from here on, both will go parallel.
So I would also like to add here would be, we all know that the market have really moved positively. There is an upside in the developer sentiments, and a lot of positivity has come in. So we have also seen green shoots in our last 4-5 months disbursement. We have started increasing our monthly disbursements, login sanctions and disbursements. We have also put in a lot of rigors. We have improved our productivities. We have reconnected with the lot of good developers, and we have also reconnected with the DMAs, the corporate channel partners. So we are coming back in a very strong manner, and we are increasing our efficiencies across all levels. So yes, we are very, very positive, and as far as forward outlook is concerned, exact numbers can't be given, as we all know that we are in the midst of the right issues. So it will not be appropriate for us to share the exact numbers of what. Yes, but yes, what we can just at this point in time, we can reassure that yes, we are looking forward to a positive ENR growth with a lot of efforts, internal efficiencies that we have brought in, and that would continue to be the endeavor of ours.
Oh, okay, fine, great. That's all from my end. Thank you.
Thank you. The next question is from the line of Bhuvnesh Garg from Investec Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. My question is on a reversal of securitization income. So just want to understand what is driving this reversal of securitization income. I mean, what all parameters you are having different experience from the assumptions that you had made earlier, which is leading to the reversal of this securitization income. One. Secondly, how are you calibrating those assumptions so that such volatility, where you recognize the income aggressively earlier and later have to reverse, that doesn't happen again? And thirdly, is there any third-party verification or audit on those assumptions while recognizing this securitization? Yeah, these are my two questions.
Securitization income, as you are aware, that we actually not do any securitization. We are doing the assignment of transactions, assignment of loans. So as per the standards, you need to upfront that particular income on the date on which you are recognizing that particular income, on the date on which you are selling that particular pool. So that needs to be unwinded based on the assumptions which you have factored on the day one itself. So based on the runoff of that particular pool and the differential spread, you have to unwind it over the remaining life of that particular pool. So if we compare the March 21 results with March 22 results, in March 21 what happened is that we have securitized a pool of 700 odd crores, whereby there is an incremental income which is coming to our PNL. Plus in March 2021 there is a reduction in the MCLR. Normally the rates on which we have sold the loans to the bankers are linked to MCLR. Because of the widening of the MCLR, and that is not under our control, there is an increase in the spread which we have earned on that particular pool, which resulted in the upfronting of an income. So last year, same time, we have recorded an income of somewhere close to 177 crores in our financial statement. Because of two factors: one is we have sold the new pools. Secondly, there is an increase in the spread on account of change in the MCLR. Now, in this financial year, what happened is there is no change in the MCLR, and we have not sold any new additional pool. So there will be a natural unwinding of the pool which will happen, and there will be a reversal of a so-called unwinding of income on account of securitization. As far as the assumptions are concerned, the runoff of the pool is being utilized to arrive at the unwinding impact in the PNL. As far as vetting is concerned, the same has already been vetted by the internal and the statutory auditors, and the assumptions are looked after by them thoroughly.
Okay, fine, sir. Thank you.
Thank you. The next question is from the line of Piyush Jain from BNP Paribas. Please go ahead.
Hello. Hello, am I audible?
Yes, sir. But there's a bit of disturbance also from your line, so if you can move
Just
your
hold
side.
Hello, am I audible now?
This is better. Yes, please go ahead.
Good evening, everyone. Just a quick question that since all the HFCs are growing in a phenomenal manner, and we all believe that the housing market is in a boom, but we are still yet to come out of the woods. So can you just tentatively tell us that what timeline we are looking that we would be in the same growth phase where other HFCs are growing? And secondly, since last 8-9 quarters we are hearing the same story. We are trying to do this, we are trying to do that, but things are not happening the way we are as a shareholder we want. So can you just obviously brief us on that also? Because one HFC has already been devastated. So that opens up a huge space for us. And we being a huge brand, we cannot even enter there. So what is stopping us? I don't understand.
I think we have made it very clear. We have had a very positive growth this time. We have already done almost about 700 crores of growth in the retail segment. So the growth journey has already started. All the problems that we had in terms of our NPAs, in terms of pricing, in terms of our a very deliberate decision of bringing down the book to an extent, ensuring the profitability is there, ensuring that the productivity and efficiency remains over there. We have actually, so more or less, we have factored in, we have overcome it, and now the journey has started. The industry is expected to grow this year by 9 to 11%. I think we expect to do the same thing. We will try and do what best is possible, but the ICRA's report very clearly says that the industry will grow by about 9 to 11%, and that's what we will also be over there in terms of the HFCs. Now, when you start comparing with the previous numbers that this company had, one of the important things was actually the corporate book that grew by scorching pace. Now, that is a business that we are not doing it. We can very easily ramp up the numbers if somebody is doing a corporate book. So retail is one that we have started, and we have shown a growth in this quarter.
So just a quick question in that. The other HFCs are actually eating up our market size. So how do we plan to reach there, which we have already lost?
There are a couple of things I did mention to you in terms of, the reactivation that we did. We had moved out completely of the APF market, which is actually the builder tie-up. We have reactivated everything, and there are almost about 1,000 APF that we have restarted, and we are sourcing business from there. Then the DMA channel was because we had decided that we will exit it from large ticket loans, so we have reactivated, and those are the ones who bring it. So we have reactivated those channels, and we are going ahead and talking. We have reconnected with almost all builders who are very clear and who say it very, very frankly that it is not. They have a lot of confidence in PNB. It's a question of you coming and bringing in the rates which are very, very attractive or which are not attractive, competitive. The more important thing is that what kind of service you provide, what kind of tax you have, and what kind of, how quickly can you deliver the loan. Even if it is a little expensive, maybe 25 basis points, 15 basis points, 25, 40. But can you actually handle it? Do you have the ability to underwrite? I think we have the ability, and that is why in this quarter there is a significant amount. There are certain things that have happened. Very clearly, we are seeing a change in the mix of the business also, and the way we are sourcing business. There's an all-time high number that we are actually looking at it as we move forward.
So, sir, if I have to ask one thing, that maybe after 2 quarters or 3 quarters, we would be in a much better picture. Is that what you're trying to say?
Deepika very clearly says that no forward-looking statement and all that, but I told you that we have started the journey.
Sir, 9 months we already had the statement that we are coming out of the woods. So that was always a forward-looking statement.
Demonstrated it to you.
Yeah, you have demonstrated it, but you have been always giving this statement that yes, we are trying, and every time the results are getting worse and worse. Now the whole point is that other HFCs are growing and we are not growing. So at least you can give us this statement that yes, we are looking for the next 2 quarters, 3 quarters, we would be in a much better shape. At least this much assurance can be given to the shareholders, right?
Definitely, definitely we will be in a better shape. There is no second thought about it.
Okay, sir. Thank you. Thanks so much.
Thank you. The next question is from the line of Sanket Chedda from B&K Securities. Please go ahead.
Yeah, hi sir. So as of now, we source about say 40% from DSA. For this next year, how do we plan to do so? In our channel check with one of the largest DSA, we have set up a very ambitious target at the start of the year. We just wanted to know what is the thought process means in FY23. How much do we plan to source through DSA, or how much we will do it organically?
MD sir has also mentioned that yes, we had improved our strategies on the sourcing mix. Our internal channel was always was doing well. So we have improved our sourcing in our internal channel. We have improved the efficiencies there. But what is importantly, what we have done simultaneously is also in last 4-5 months, we have reconnected with many DMAs who had been disassociated with us due to our internal issues and last couple of years that we had faced. But then we are regaining their confidence. We are reigniting those relationships, and we are getting our pie of business from there, increased pie of business. But yes, since market has gone away from us and those large number of those large bigger DSAs and important channel partners, they are now returning back. They are also reposing faith in the team, and we have increased our business share, which was, I can share those numbers. We were doing close to about 30-35% kind of business now, which has already moved to 40%, 41% kind of number, and we have already reached that level. So I can only, at this point in time, I can only say that yes, with the increased rigors, with increased connectivity, with increased better relationship, better management, we would be increasing both our internal channel business as well as DMA business, and that should reassure everyone that yes, we are on the right path and we are doing all the right things.
Okay. So just one more additional question. So of late I've been hearing that all these DSA, whatever loans they sold, they kind of have some tie-up with the ARCs also for the stress resolution, wherein you could have some sort of recourse. It may not be direct recourse, but do they provide this kind of services that DSAs have a partnership with some ARCs which help resolve the asset in case it goes bad?
No, we don't have such kind of clauses, and we don't work in that manner. Yeah.
We don't subscribe to this kind of the work culture.
Okay. So my question was rather not for us. Do this kind of settings are prevailing or coming up in the space as you would have witnessed for others?
We are not aware of any such practices going in the market. And since you asked, you are informing us, we are clearly saying we don't subscribe to any kind of this structure or a facility in the market.
Okay. Got it. Cool. That was the only question.
Thank you. The next question is from the line of Abhijit Tibrawal from Motilal Oswal. Please go ahead.
Yes, thank you for taking the question. Just one question.
Sorry to interrupt you, Mr. Tibrawal. Your audio is not very clear. Can you come closer to the phone, please?
Is it better now?
Yes, thank you.
Yeah. So I joined about 10 minutes late, so I missed a part of your opening remarks. Deepika, possible for us to remind what color did we share on the corporate book? I mean, which accounts kind of moved it or slipped into NPA in this quarter, and what was the quantum of exposure?
So on the corporate side, only one large account, which is a Mumbai-based asset, a very prominent one, had moved into NPA in Q4, and that is the only forward movement in terms of corporate account. Apart from that, if you look at 64% of the book still remains to be in stage 1.
And what was the exposure to this Mumbai account?
It's 659 crores.
659?
Yeah.
Okay. And have we seen any resolutions in the last, let's say, two quarters? This quarter, let's say Q4 and Q3. Have you seen any resolutions? Because I'm looking at slide number 18, where we are talking about corporate book remedial actions. I don't know, but where is this Radius account sitting there? Is it the project with? Where is it? The Radius account where you used to have exposure of about 250 crores?
So, it's there in the slide.
So, Abhijit, Radius is an account which we have written off last quarter. So
okay. We've already written off Radius, is it?
Yeah, we've technically written it off. We fully provided for it.
Okay, all right. But we are still kind of trying to pursue resolution in Radius.
So Radius, yes,
It was just a technical write-off. We will continue to work to resolve account and move forward, but from the balance sheet, we have actually written it off.
All right. And then, I mean, these 4 accounts that I see on slide number 18, I mean, I'm guessing 3 of them are Supertech, Ornate, and Vipul. Which is the 4th account here?
One is, so there is Arena, which is, so in the final stage of resolution, there is one Arena which is there, which we are very close to resolution. And apart from that, the account that we mentioned, which is moved into NP in Q4, that is also mentioned there.
And just to add one more point, since you joined late and missed out the opening comments and the commentary given by the managing director, this particular slippage is coming from one of the top end developer in India, and another they are into joint venture with the second topmost developer in India. So it was, we will say it's unfortunate because of some internal issues it has happened. The underlying asset and collateral and the security value is superb, and it was never into delinquency. It just slipped into the delinquency in a one shot.
Okay. So which is then fair to say that given that this is the largest developer in India, JV with maybe the second largest developer, you expect a resolution in this soon, is it?
Yeah, so it's basically an interstate dispute. We are working with the developers to solve the issue there. But otherwise, we are still going strong on the asset itself. We've taken the symbolic possession as well. We're putting all kinds of resolution strategies in play to resolve it as early as possible.
All right. And my last question is, I mean, while I understand we're working on the rights issue and which is why maybe we are shying away from giving any forward-looking guidance, but lately, I mean, our team, the management team, has been seeing some churn or exits. What I'm trying to get to is, I mean, I recall, I mean, last quarter we informed about our CFO kind of deciding to move on. I mean, recently I gathered our business head retail has moved on to another peer. I've heard of a few state heads, I think, moving on. I mean, what is your sense? I mean, is it because of purely, I mean, personal reasons, better opportunities that we've seen a churn in our team, or do you think that the team that we have now is kind of stable and you can look forward to, I mean, stabler times ahead?
Okay, so see, we have no doubt a few senior leadership exits during the course of the year, but we've also kind of added a few senior leaders within the team. We also have focused a lot on bringing in internal talent and growing them for leadership roles. So that's one thing that we have done quite successfully this year. In fact, quite a number of people have been provided an opportunity to pick up senior roles. And this is a process which will continue to happen over a period of time. I think we also haven't faced significant challenges in attracting talent over a period of time. So we've done, in fact, significant amount of hiring this year in terms of filling positions right from junior level to senior level. So that has happened quite well for us. We haven't faced any challenges. I don't think there is also a significant business pressure that we have experienced on account of attrition. Just on the attrition front, on overall, we are in line with industry. In fact, quarter-on-quarter comparison, we in fact have been able to sustain the same level of attrition, and that has not kind of increased in Q4. So which means that we've been able to arrest that, and it's been in line with what the industry is today.
Great. Thank you so much. Wish you the team the very best.
Thank you. As there are no further questions, I now hand the conference over to Ms. Deepika Gupta Padhi for closing comments.
Thank you everyone for joining us on the call. If you have any questions unanswered, please feel free to get in touch with Investor Relations. The transcript of this call will be uploaded on our website, and the audio of the call will also be uploaded on our website, that is www.pnbhousing.com. Thank you.
Thank you very much.
Thank you. On behalf of PNB Housing Finance Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.